There, I've just been talking on Forex Factory about a price. You know, it's either walking up like it was here, you know, makes new highs, pulls back, goes on, makes a new high, pulls back, makes a new high, pulls back, makes a new high, and then it fails to continue to walk up. And what do we see then? It starts to walk down. And now we're seeing price starting to walk back up again. And this is what price continually does. Like here, I mean, it's not perfect every time. You know, you're not going to get this kind of structure all the time, but this basically, it demonstrates what price is doing, because here we can see price was going up, it started to come down. You see price was going up, made this high, started coming down, and then you see here it failed to continue going up, and then it started to walk down. And at this point where I was looking to go short, you see price stopped stepping down and then started to step up. And if you're going to take these trades, you want to be taking trades from the bottom of a step, because here you see price started to step up from here, and we had this big push up. Price comes back to the top of this step. You see that is where price started to step up. Where price was bearish here, it didn't continue bearish, it started going bullish from here. And that's when I started looking for price to come back into here to start going long again, and that's when we had this bullish reaction that got me into going long. See, at the moment we've got prices started to step up. We're now pulling back. So if I was going long now, I'd want to see a bullish reaction from here. Price has stepped up, come back, stepped up, come back, gone up through here. Now we're coming back down through this step and this step. Well, actually it's that one. Because now you want to see a bullish reaction before there's a close, but before price starts closing below this low. See, it depends how far you think price is going to step back up into this area. See, because there it's got 20 seconds. I mean, if that closed like that, that's, you know, that's a good entry if you're going to go long. So that would put my stop down here. So if I went long in there somewhere, that would be where my stop would be. Entry around there somewhere. My exit. Exit up around there somewhere. I'm not taking the trade because for me, I like to get all my trading done by this time, by 12 o'clock ideally. And we're just coming up to 12 now. That this might well, because you know this is a 50 pip take profit, a 25 pip stop, and the target you see is within the swing high here. And it's all dependent now on, you know, making new highs, because for the price to continue going up, it's got to break through this high. Price has got to break higher, and then this becomes the bearish zone. Price breaks out through here, and then price can work back into this. You see this bearish push down, price will work back into this, and if it's going to continue going up, it will find the demand in here to continue pushing and keep pushing higher, if that's what it's going to do. I mean, really, what we've got to do when we're trading is to limit the amount of exposure we've got to the markets. You know, putting our money at risk. and I put my money at risk 3 times today. Won 2 of those trades and lost 2 and won 1, which isn't brilliant. So, you know, like I said, I need to, well, we all need to limit the amount of exposure we've got to the market and pick high probability trades. But you see, now you see price is stalled at the high here. So you know, this means that you know, the stop is vulnerable because price hasn't moved up into the next, you know, moved up and created the next step. We're still trading within this step. You know, there is areas of inefficiency up here that, you know, price still might need to come back to fill in. See, this morning price, you know, came up. You see, there was this area up here that wasn't mitigated, didn't get revisited. Well, actually, we just came up and equaled that high. The price might have to come up in here. You don't know. So when you put a trade on, you've got to be prepared to let it go to your stop. You know, you see price starting to work against you, and you need to know how good your chances are of your entry method hitting your target before it hits your stop. Because if you've got no confidence in your entry method, then you start seeing price doing this and you're going to be just jumping out. Because I must admit, I've been doing a lot of it recently. I've been jumping out too many trades. When I see this happen, I've been jumping out too much around break even. So really, if price comes through this low, then you know, my long trade is no longer valid. But the whole idea is, you know, once you're in a trade, you've got to have, like I've said, you've got to have confidence in your entry winning more often than it loses. See, if I wanted to be ultra safe, I'd be putting my stop below these levels. But for me, it's the stop is getting too big if I want to have, you know, a good risk to reward. So I've just found it more helpful to have to be able to at least see the 5-minute chart as well, because that's more or less where my entry would have been. And you can see on a 5-minute chart, you know, we've got this bullish reaction. I mean, as it turns out, this is like I said, it's just dependent on whether this low holds or not. But you know, when you can see a 5-minute chart, you know, like I said, you've got this bullish candle here, so it gives you more clarity on entering on a 1-minute chart. But you know, when you're trading, you've got to decide how you're going to handle these sort of situations. Are Are you going to allow once you've entered a trade for the trade just to either hit your stop or hit your target, or are you going to in certain circumstances jump out of a trade? Because if you are going to jump out early, then you've got to keep some sort of stats on break-even trades that you have, whether you know, jumping out at break-even, whether they would have gone on and hit your target or would have come back and hit your stop. It's always good to track that, because I must admit I am doing that. I'm tracking any trades that I get out at break-even. I'm tracking to see whether they would have ended up in profit or ultimately gone on and hit my stop loss. And at the moment, through that tracking, I would be slightly worse off if I just allowed the break-even trades that I've taken to run to either the stop or the target. But for me, actually getting out at break-even on certain trades does work for me. You know, it's a very small margin. It's probably less than 1%. But you know, the only way this will continue being a good trade now, you know, I've got to see price start making a new high here. It's 12:04, so one more minute. 30 seconds, and this 5-minute chart will close. As we can see, you know, there's definitely some bullish reaction here, but it's you see all the it was in here. See, a bullish, bearish. There's something going on in there. There's something owed in price on here, on this level. We can see it. Now, the last time price was here, it came down to this level. Now we've worked back up here again, and so far we're only coming back to here. So is that going to continue, or is there going to be more selling at this area, more supply here than there is demand? Well, I must admit, if I was actually in this trade, I'd be looking to get out at break even, because I don't probably not going to get the opportunity, because once you see this, see, the last time price was here, it came up to this level. Now it's only just getting to here. last time price was back on at that level, right there, it only got to this point. See, now let's see how far this it goes now, because if it doesn't break and make a new high, then the chances are price is going to drop off from here. So what you're going to do, you've got to make a decision there. You either jump out at break even, or you keep the trade going. And it's always a difficult decision, because you feel like when price is here now, you're thinking, oh, you know, we've had these bullish push up, just keep it going for a bit longer. So we'll just keep it going. But remember, see, right now I can jump out at break even. I either keep it going or jump out. See, this is the difficulty. I mean, now look, you're thinking, oh yeah, I should stay in. But this is, you know, it's the difficulty of taking these trades. There's a lot of work that needs to be done. So which way is it going? So there's something there. Because I noticed the live trade that I was in at this point, and I saw price going through, you know, stepping up here. See, it stepped up there, came back into this bearish area here, and we got price stepping up here, and then it was pulling back. And you see, if I was seeing price break through there, I was going to be getting nervous that price was going to drop, and then we got this massive bullish reaction. And without price come back, look, we get this bearish reaction. That there's definitely something going on at this level. So it's that I'm looking at, is when price breaks higher, I'm looking at price coming back into these levels and then keep going. And that's basically what's happening here. See, now we're getting price breaking higher. Yeah, see, price goes through, makes the high, look, comes back into this level and starts to go. You quite often get that, and the same with this level here. It will come through into the level below. See, price stepped up, came back, stepped up, came back into the 2 levels. Price steps up, comes back through to the 3 levels. But this is, you know, what I'm doing when I've got an actual trade running. I'm watching like this, the different reactions at different levels. See, with this trade, I didn't even get a chance to do any of that. It just went straight to my stop loss. It was a terrible short trade. I mean, this trade was better, but what I've been doing is trying to hold on to trades rather than just jumping out once they start to come back. I mean, in this case, as you can see, if I just, you know, price stop going in my direction and just jump out, but you know, price was on this move up. So really, you know, the actual entry here was valid because it came back into a zone that I was watching, and I had this bearish reaction, which is what got me going short. I mean, in hindsight, yeah, you know, I should have jumped out at break even, but you don't know. Like with this one, you see, if I'd just been jumping out because price started going against me and jumped out at break even, I've now got a trade that's going in my direction. Let's get rid of this stuff. get some order to this. Now I'm expecting price to come back probably down to this level where the two boxes overlap. See, like here, that's what I'm trying to explain. The chances are, like I said, price will come down through, and if it's going to continue going higher, if it can't just continue going up, but it wants to go up, then it will come back into here to find demand now to push it higher. Because I learned a lot of this watching Chris Laurie, and he was explaining, you know, you'll get price now hanging around. You'll get price when it starts making a new high, it will start shooting, it will start moving to the new high. But in between, it hangs around. You know, there'll be a lot of to and fro, like here, you know, you get these two candles, and then price goes, and it will go relatively quickly. See now, price moving like it is, look, it's leaving gaps because it hasn't come back. These two bearish candles failed to come back to fill this in after that bullish move up. It didn't come back and fill this. See, it nearly jumped out here, you know, when price failed to break through these highs here. Like I said, you've got to make the decision whether you're going to, once you've taken a trade, let it run, or, you know, jump out at break even. And you know, if you've, because, you know, when price was hanging around here, it looked a lot like, you know, price could have come back and just hit my stop, but it hasn't. It did work its way through there, but you know, when you're in the live trade and you're watching price go against you, it's not so easy to keep the trade running. Because I know, you know, I've jumped out of trades myself once I've seen price started to go against me, jump out just to have it do what it's doing now. And now you see, it won't surprise me to see price come back into here, at least to this point. And it might only come to there. See, there's just those two bearish candles there. So, I mean, price doesn't always move as cleanly as what it's doing at the moment. There are times when, you know, price just takes off, and because when price is moving as efficiently as this, it's relatively easy to get into trades. You know, like, you know, I know this isn't a live trade, but where I got in, you know, there was plenty of opportunity to get into a trade. When price is moving fast, you don't get the chance to get in. Where was it? What day is that? It's the 28th. What day was it when it was really running? Yeah, on Thursday. See, price was just running on Thursday, and I got into a trade here, I think, because that whole run up was just hanging on that single bar, and I saw that bar form, but I was waiting for the pullback, and it never came, and I struggled to get in. All this move up, and I was struggling to get in because I wasn't getting the pullback, the efficiency that I like to trade in. And that's the difference between that and what's happening now. Is what we're getting now is a lot more efficiency. For me, I'm better off in I don't, the way I trade, I don't trade so well when price is trending, when it's trending fast, because I'm just looking for relatively small target. You know, I'm just looking for a 40-50 pip target, which in the grand scheme of things isn't very big. So of course, doing that, I need a small stop, so my entries have got to be very specific. You know, like I said, if prices, and I've got to watch this because see, price might have filled enough of this. It might not need to go any higher. But like I said, I find it a lot easier to trade an efficient price rather than when it's trending aggressively. See, I get the feeling price is going to turn from here. And there again, it might not. See, again, you know, price is up, you're getting close to your target. I mean, I must admit, when price is up here, I've moved my stop up to break even. But you know, you've got that choice now. You know, if price starts stalling here, do you just let it keep dropping? Because like I said, there is an inefficiency in here. The price might come back and have to fill this in before it can go. And if it's going to continue going up, it might have to come back, fill this in before it can continue higher. And you've got to, you know, think, right, you know, I'm up now, whatever it is. Am I going to let price come back to here? Maybe on the hope that it's going to turn around to continue higher. There's all these decisions to make. So your price is failing to close higher. And if price is going to continue going up, like I said, it might have to come back into here somewhere, fill this in, pick up the extra demand that it needs to break through this supply level. So at the moment we've gone through. See, we're not quite hit that last bullish candle yet. See, that was the origin of this push down. See, it's right in there. So just look at it, little micro levels now. See how just those two bearish candles and price reacted off of them. I don't know, you know, how many people are interested in trading a 1 minute time frame and these shorter time frames, but this is the sort of, you know, trade management that you need to go through, and it's decisions that need to be made, you know, as the trade is developing. See, this is now getting up close. See, it's just hitting into. See, it's the origin of this push down. It's right in here. Are we going to get that last step up? I don't know if any of this makes sense to anyone. See, price hasn't quite hit my target. Guess how many pips is that? That's 49 pips. See, is price going to have to move back? See, there's the bearish move. Well, it goes down to there. This is my problem. I get quite pedantic about once I've set a target, I find it very difficult just to exit. I don't know, does it make any sense? Does it make sense? So all I'm doing is price breaks through a high, is highlight the bearish, because here see what I'd want to see. Oh God, it's bloody. See the it's the bearish reaction. And you see here we've not made a new high, so we'll see. Price might have to come, like I said, come back, fill this gap in. But as you can see, this is the high of this swing. I mean, today's range is from the high to the low, and we're trading within today's range. And as you can see at the moment, things are bullish. But is this going to be, as far as this high is going to be the limit of, you know, price isn't going to go any higher today? Or see, there's inefficiencies up in here. In here from today. This is today's high. I don't know if price has got to get up and fill this in before it can continue dropping. But you can see Price dropped back, failed to make a new high, and we've got a lower high here. I know it's only internal structure on a 1 minute chart, but that could potentially be the start of price dropping off. See this, we're in the same situation as price was down here. So here we've even made a new low, look. We broke this low. Here we didn't close below this low. You know, you've got to make the choice. You either jump out now, just before you take profit, or you wait, and if price starts getting below here, then I would have to get out, because then we're getting a switch in the order flow, and it was just internal structure. It's, you know, it's like I said, it's all decisions that have got to be made before they happen. You know, you've got to be aware of the order flow. See, we're getting new order flows coming in. That I either get out now, or I'm going to be forced out if price starts breaking below here and making new lows, even though we've got this unused structure here, this gap that still hasn't been filled. You see, price might come down, fill this gap, and then shoot up. This is why I find watching this, so it's fascinating. I know most people just get really bored with it, but see, now we get price dropping off. I get the feeling it might have to come back into here. But this is why I'm going to take a trade. I'd rather, you know, get my take profit within a swing point. Because right now, if my, I would have hit my target now. If my target was higher than this, I mean, like the trade I took here, my target was higher than the swing. It's always better to have a target at the swing high. I mean, I must admit, you know, once you're going higher than the swing, you need to monitor. Once you start getting up to the, you know, the swing high, you need to monitor price even closer. But I just wanted to do this video just to show people how, you know, this stepping effect in price. You can see it's continuing now. But anyway, I'll leave this video here now, and congratulations to anyone who's still watching, because you know this is the sort of price action is fundamental to the way I trade, and you know, hopefully it'll help someone maybe get some inspiration to, you know, to follow price like this. Anyway, I'll leave this video here and see you in the next one. Bye for now.